Hi everyone, welcome to another video on stock analysis. My name is Shantanu and in this video I'm going to be talking about ZEE Entertainment Enterprises Limited. So I'll talk about the history of the company first and a bit about the management also, and then I'll talk about the business model of the company, the recent financial performance, and finally my personal opinion. Now before moving forward, I'd like you to know that ZEE is a subsidiary of the SL Group, and in this section I'll mostly cover the history of the SL Group and I'll talk about how the idea originated of setting up ZEE Entertainment Enterprises Limited, right? So the SL Group was originally founded by Mr. Jagannath Goenka back in 1926, and the name of the group back then was Messrs. Ram Gopal Indra Prasad. The main core business of the group was to sell food grains. Now initially when he set up the business, Mr. Goenka finally realized that the business was unstable and it was consecutively making losses instead of profits. The only location where Mr. Goenka made profit was Hisar, and so finally he decided to move to Hisar and set up the factories there, and so the main core business now got shifted to delivering only food grains to Gujarat region and the South Indian regions. Now by 1973, Mr. Subhash Chandra, who is the grandson of Mr. Goenka, took helm of the company, and at the time of taking the command of the company, you should know that the company was already in a huge dip. That is because the company was previously quite unstable and it had been making losses. So in order to make the business survive, Mr. Goenka had to take some loans and debts. Now in 1976, Mr. Subhash changed the group's name to the SL Group, and it was also the year where they bagged a major contract for exporting soybean and rice. Now in 1983, the SL Group decided to foray into the amusement parks business. That is because the SL Group believed that amusement is something which is directly connected to the emotions of the public, and this would help them in the longer run to generate revenues, obviously. So they set up the SL World Amusement Park in Mumbai, and the returns from this amusement park were disappointing and not up to the mark. But this gave the SL Group an idea to foray into the entertainment industry, because entertainment is also something which is connected directly to the public's emotions. And so this led to the foundation of ZEE Telefilms Limited. Now you should know that ZEE Telefilms Limited, which was later renamed to ZEE Enterprises Entertainment Limited, has been the major profit generating company for the SL Group. And you should also know that the SL Group has only 23% of its stake left in ZEE. This is because all of the other stake of the company has been sold off to reduce the debt that the company has, and almost all of the stake that they hold is being pledged as a collateral to repay the remaining debt. So technically the company has no stake in ZEE Entertainment Enterprises Limited. Well, before I move forward, don't forget to hit the like button and subscribe to the channel if you are liking this video so far. And now I'll talk about the business model of the company. So the business model is pretty simple to understand. ZEE is the largest creator and aggregator of the entertainment content throughout the world. They also have few other subsidiaries such as Asia TV, ZEE Studio, and so on. They have also forayed into the cloud streaming segment. So they have a platform called as ZEE5, which is an OTT platform. If you don't know what an OTT platform is, the full form of OTT is over the top media service, and an example of this can be Netflix or Amazon Prime. And yeah, that is pretty much about the business model. Also, you should know that all of these TV channels out there that publish and create content which is available on the television majorly earn their revenues from the advertisements that they show on the channel, right? So that being out of the way, let's discuss the recent financial performance of the company. So the revenue has been down 34% on a year-on-year basis. The company claims that this decline is due to less availability of content. That is, they are finding it hard to produce content because of the unavailability of the actors, and this is mainly due to lockdown and COVID happening. And the profit has also been declining on a year-on-year basis. If you come to that, the numbers are pretty staggering. The profit has declined to 94% on a year-on-year basis, which is, anyways, the viewership has been increasing, which is a positive sign. And the company claims that the reason this viewership has been increasing is mainly due to people sitting in their homes and watching TV all throughout the day because of the lockdown happening. The company claims that the revenue has been affected also due to the fact that the employee cost has been increasing, so the operating cost mainly has been increasing. And they also say that they have been promoting their OTT platform ZEE5, and so the promotion activity has consumed major part of the revenue. So this was all about the financial performance of the company. Now I'll talk about my personal opinion. Now I'll talk about the positive points of the company. First is the growing market share, which you all know. The company also claims that their market share has been increasing, and they're the largest creators and producers of entertainment content throughout the world. Second is that their OTT platform looks promising, and the viewership on the OTT platform has been increasing. So that's a second positive point. Now coming to the negatives, there are a lot of negatives. I'll start with point one, which is the debt of the company. So the main reason that I'm not interested in investing in this company on a short term or on a long term basis is due to the debt that the company has. And like I discussed earlier, the promoter itself, which is the SL Group, holds only 20% of the stake in ZEEL, which, like I said, is already pledged as a collateral for the remaining debt. Another negative reason is that the company mainly relies on advertisements for its revenue. So major chunk of the revenue comes from the advertisements, and one of the reason why the revenue declined during this period, COVID period, is because the advertisers weren't willing to pay that particular advertisement revenue to the TV channels, and this dependency on the advertisers and the price that they pay per ad is something that I'm not comfortable with. Also, although the OTT platform looks promising, the platform is still in the development mode, and the company is allocating large chunks of amount to promote the OTT platform. Now, unless and until it becomes quite stable, the OTT platform, I'll still be a bit skeptical and keep away from the share. So overall, my outlook on this company is negative, and I personally wouldn't like to invest in this company for a short term or for a longer period. And this was it about this video. I really hope you like the content, and if you please do hit the like button and subscribe to the channel if you haven't already, and I'll see you guys in the next video.